Good afternoon, everyone, and welcome to Progressive Planet's fiscal Q2 2026 earnings call. The financial statements and MD&A have been filed and can be accessed through the SEDAR website. Today is Monday, December the 22nd, and joining us today is CEO Stephen Harpur. He will be presenting the company's financial results, followed by an audience Q&A session. I would remind everyone that certain statements made today may contain forward-looking statements that are subject to known and unknown risks, uncertainties, and other factors. For a complete description of the risks and uncertainties facing the company, please refer to the MD&A and other continuous disclosure filings, which are also on the SEDAR website. And now I turn it over to Stephen Harpur. Good afternoon. Welcome. Happy holidays.
Thank you. First of all, thank you to everybody who's taking time out of your day to listen to this today. A day of joy for us as we hit a 52-week high on our stock with really strong volume. Thank you for trusting us with part of your hard-earned capital. We're grateful for our shareholders. So thank you very much. Once again, we are products for a healthy planet. That's our underlying theme. It's what we're all about. It's what gets us up in the morning. I am not going to spend any time on the forward-looking statements, but I have it in my deck as we always do. Progressive Planet at a glance. We are a profitable, vertically integrated, clean tech manufacturer focused on eco-friendly, silicate-based products. Cash flow funds our innovation pipeline. We have patent-pending solutions poised to disrupt the cement industry. We actually got our first patent on Pawsglass in South Africa this year, and we see ourselves getting more of those provisional patents to full patents over the course of the next 2 years. Ownership of mineral assets is a key competitive advantage. I like to think we have a disciplined management team, and we are now actively seeking our next acquisition. Our first major acquisition was in February of 2022, and in 2026, we feel we are ready to look for our next accretive opportunity. Our area of expertise. We like to focus on what we know best, which are silicate minerals. All of our legacy business are aluminosilicates, and our Pawsglass are sodium silicates. So it's very simple. We extract silicate minerals from owned and operated surface quarries. We have a product innovation platform supported by strong IP portfolio. We have existing patented product called Activated Burn Fresh, about 7.5 years left on that US patent. And then we have patent pending Pawsglass, 2 different patents filed for Pawsglass. And then recently, about 3 months ago, we filed a provisional patent on Gladiator SCM, our second alternative cement. And then we have product manufacturing centered around silicate-based raw materials. Our businesses, I've already just briefly described them, absorbents and animal health products since 1989. Progressive Planet acquired Absorbent Products, which has been around since 1989 in February of 2022, fully assimilated the 2 companies. We operate out of 1 location. Head office is right at our production facilities. And then we have our pre-revenue cement replacement. We are laser focused on streamlining our legacy operations. When we bought the business in February of 2022, it needed significant investment, and most of those investments have now been made. Some of the equipment is on order, and I'll go through what's happened and what is happening. So the first robotic palletizer was installed 18 years ago, and we have a newly installed one that we just installed in Q2 in October, which increases our palletizing ability, our capacity by 70%. I want to note that there are no planned shutdowns in our current quarter, which ends on January 31st of 2026. And in Q4, we will see installation of our of an automated valve pack bag filler. This will significantly reduce manual labor on our second largest production line. And also in Q4, we will install a new fine grinding system, which will increase our fine grinding capacity by 700%. And in the next 12 months, we will see three projects to reduce consumption of natural gas, where we've been awarded 1.9 million in grants from Fortis BC. Operational highlights Q2 and looking forward. The planned shutdown was completed on time and on budget. The new robotic palletizer was installed. All our four production lines are now fully operational. We will have another shutdown in Q4, which will affect our valve pack line and our fine grinding system. The fine grinding is tied into the valve pack line. It is our second biggest line, and it will enable us to have automated bag filling for our Red Lake earth, for our geothermal grout. And so these are very big sellers for us, and we will remove manual bag filling. This will also see a 700% increase in fine grinding, which produces the product that goes into this valve pack line. And it will also see a reduction in natural gas costs because many of the coarse powders that we simply cannot process into fine powders and finished product fast enough right now. So we're forced to extrude that, which means that it gets wetted and compressed and goes back to the dryer. That will be eliminated with the new fine grind. So, and this new fine grinding system is being funded by grants. Want to talk about our customer favorites, sort of give people, ground level of who we are. Red Lake Earth, that is the number one product that's produced on our valve pack line that I just talked about. Activated Burn Fresh, that is our patented product, which reduces the formation of ammonia in commercial broiler houses. It makes it healthier for the chickens and for farm workers. And Stall Dry is the market leader in deodorizing and absorbing moisture in horse stalls. And then Can Dry is the only made in Canada product, natural clay based with no chemical additives, that is made and distributed in Canada. Moving on to Q2 as well as 6 month highlights. So we did see a significant decline in revenue in Q2. I foreshadowed this in a news release on October 14th with the shutdown we anticipated with bringing on two new SKUs, the Pure DE line, our new brand that is launched in the US. Setting up for that, there was significant retooling and also shutdown to install the new robotic palletizer. So we did see a reduction of 9.2% in Q2 over the prior year. However, if you look at the 6 months, you'll see that we did 10.87. So if you look at the full of last year, we did roughly 19.6, and you can see now that we've done 10.87 in 6 months. And of course, we had strong net income in the quarter as well, up just under 56%. So Q2 order backlog and market momentum. As I stated on October 14th, we anticipated a significant increase in our backlog as we actually had a record. We had 2.748 million of purchase orders that we received in October of 2025. And we knew that we just would not be able to fulfill them all with the planned shutdown and with the retooling and with the packaging that we had to procure for the entry into the new Pure DE line. So two new SKUs are in talking about market momentum. We received all of these purchase orders for the Pure DE new brand that is packaged in the US. We have a wonderful partner in the US, the Bennett family in Eastern Oregon. They are superb and an awesome partner. So they are producing all of the 20-pound bags at their family's packaging operations as our client. And then we are producing the puffer bottles up here. So Pure DE orders were received in Q2, but we started fulfillment in the first week of November, the beginning of Q3. We do have a third Pure DE SKU to be placed in over 2,400 stores in April of 2026. That's the end of Q4. We do expect to see meaningful revenue from this entire line. And then after we had a record Q1 agricultural sales, Q2 did see a slowdown, but we've seen a resumption of strong ag sales to date in Q3. Another major growth initiative for us and momentum for us is launching lightweight cat litter, which we intend to launch in Q4. We have never ever sold lightweight cat litter. It's a very strong growth market, and we licensed a technology to make our lightweight material, our DE, that we harvest in BC, clump. And so we will be paying a 3% royalty, but we envision very strong sales of this product going forward. Want to talk about the Z1 zeolite quarry? We made a financial decision. The lease expired in November 2025. The Z1 had no market-ready product, and the bulk of the money that was spent on this expiration asset was before 2018. And if people have been with the company long enough, I became the president in January 2018 and the CEO in April of 2018. So, with respect to timing of the disclosure, the write-down will be recorded in Q3, but we announced the same date as we issued our Q2 financials. We announced it. It's disclosed in the MD&A, and it was disclosed in the news release to inform investors early. Why did we do it? Well, we wanted to focus on better assets. The acquisition of absorbent products in 2022 brought redundancy and better mineral assets and existing product lines, including existing zeolite assets that already had approved OMRI certified products. And then with the acquisition of Ferguson Creek, it brought better SCM assets. Now, there's been a fair bit of chatter on the online forums, some negativity against us with respect to choosing to write down this asset. The same people that are criticizing the write down of this asset were highly critical when we spent a lot of money on the Heffley Creek. And on this one, we only spent $8,000 since the acquisition of Absorbent. So it's never fun to have a write down, but I believe we did the right thing. Growth driver entry into lightweight cat litter. It's 50% lighter, allowing more product and revenue per truckload. It has lower transportation costs, and it's aligned with our sustainability values. Now, the North American cat litter market is estimated at US $1.7 billion for 2025. And the beautiful thing, and I say this humorously, is that it doesn't matter where the economy is, your cat still pees and poops the same amount every day. So we are selling essential consumables in the cat litter. We have a new private label SKUs with a major Western Canadian retailer we're launching in Q4, and it's our intention to create our own brand, WonderCat Lightweight. Another growth driver for us is entry into geothermal grout. I'm absolutely so proud of our team for developing this product over a year ago. We spent over a year getting the right NSF 60 certifications, so this can be used around drinking water supplies. But essentially, it's turning a waste fine into a monetized product, and it utilizes the fines generated from the WonderCat litter. And it's less seasonal than we anticipated. And we've seen robust sales of this in the last couple of quarters, and we anticipated not getting any orders for this in these months. So thermal enhancement of boreholes for ground source heat pumps. This is the value proposition is this geothermal grout ensures a smooth transfer of heat in and out of the pipes into the ground. Another growth driver for us is resumed sales of White Lake Earth products, plus the launch of our Pure DE. All of our White Lake Earth bagged product is produced in Eastern Oregon by the Bennett family. Once again, the wonderful family that we do business with out of Eastern Oregon. And the 20-pound bags of Pure DE are also filled at their bagging facility in Eastern Oregon. Currently, we do the puffer bottle and we shipped thousands and thousands of those in Q3. So, as a growth driver, we lost the business on the White Lake Earth when the Eastern Oregon DE mine essentially closed when it changed hands, and it was bought by the second biggest cement company in the world, and they expanded their mining, the quotas of what they were annually allowed to extract. And when we got access back to it, we resumed sales. We lost about 10% of our business when we lost the White Lake Earth sales, but I'm even more excited about the Pure DE brand. So while we resumed the White Lake sales, about a year ago, and those are still going strong, we've now launched the Pure DE, and two SKUs started in November 2025, and that is bags and puffer bottles, and jugs are commencing in April of 2026. We did make a major investment with one of our biggest US customers, where we have the 2,434 stores, to procure long-term shelf space. We replaced a competitive product on the space. That cost a fair amount of money, and we will see an impact on our selling costs. We will absorb that in credits to that customer in Q3 due to the investment that we made. And I'm very proud that we made that investment. Moving on to the growth driver of Glass, the North American cement market. Cement is the most widely used building product in the world. The US market for 2025 was estimated at 15.2 billion US, growing to 18 billion by 2029. Canada, 832 million in 2025, growing to US 1 billion by 2029. I note that fly ash and natural pozzolan are currently blended at 20%. Industry is seeking to move to up to 40%, and we are developing our materials to replace up to 40%. Why is Glass our first alternative supplementary cementing material? What's the big deal about it? Well, it is phenomenal at mitigating one of the biggest problems with concrete cancer, as it's known in industry. The technical term is alkali silica reactivity. There has been concerns in the past when you use traditional ground glass pozzolan that it could lead to performance problems with respect to the formation of alkali silica reactivity. And recent testing, we've published this in news releases in Q1, show that replacing 30 to 40% of cement with Glass, it performed much better than a standard 100% Portland blend in mitigating the formation of concrete cancer. And it also performed much better than conventional ground glass pozzolan. So all of our value proposition is that we grind our powder underwater, which releases this chemical that makes the powder stronger with the release of this chemical. And that is where we filed all of our patents. So Progressive Planet and Amrise, we've partnered with Amrise Canada. It's, for scalable cement innovation. They are our partner, our tech partner on our pilot plant. We have a multi-year agreement where they'll buy all of our Glass produced at the pilot plant up to 3,500 tons a year. Our long-term commercialization strategy includes licensing Glass as a royalty-based solution, with cement kilns to own and fund installations at their kilns with no capital cost for us. The Glass SCM, one of the beauties of this very large project for us is that we have not had to go to the market and dilute in order to fund it. So since 2024, we secured grants from various sources representing more than 7.6 million, with up to 5.7 just for the Glass pilot plant. I post updates every week, video updates. We are rapidly building the Glass pilot plant. We started putting third-party equipment into place in the steel structures last week. And we also have a continuing ongoing effort to find non-dilutive funding as part of our corporate culture. We're always looking to grow our balance sheet without dilution wherever possible. So we did file another provisional patent on a new, a new a cement product called Gladiator. And Gladiator, why? Why did we do this? Well, there are two reasons. One is that it is an exceptional product for strength, but secondly, it only uses a fraction of it is pause glass. And the word gladiator is a tribute to Roman concrete, but it's also an acronym and a play on words. And the first four letters, GLAD, stand for glass, limestone, and diatomite. And I can say that now because we filed a provisional patent and we figured out a novel way to activate diatomaceous earth and intergrind it with glass and limestone and produce this wonderful new product. So we're very excited. There is only a limited supply of glass in the world, and with only adding 10 to 20% of pause glass to Gladiator, we can produce so much more Gladiator than just pause glass alone. So I'm very, very excited about this second product under development. Growth driver summary. We are entering into the lightweight cat litter business for the first time ever and launching 4 private label SKUs and WonderCat Light, our new in-house brand, in Q4. We entered into the geothermal grout market in the last year. We have an expanding product portfolio and renewal of sales of White Lake Earth and the Pure DE SKUs from Eastern Oregon deposit. And we're very excited about Pure DE. And then we have as future Blue Sky, Pause Glass, and Gladiator. And then finally, it's been almost 4 years since the successful acquisition and integration of Absorbent Products, and we are actively looking for our next acquisition in 2026. Investment highlights. We are a profitable, vertically integrated clean tech manufacturer focused on eco-friendly, silicate-based products. We have robust cash flow that funds our innovation pipeline. We have a clean cap table. We have no warrants, no convertible debt. We have patent pending solutions poised to disrupt the cement industry. We own our own mineral assets in all of these surface quarries, and that represents a key competitive advantage to some of our competitors. And we have a disciplined management team that's focused on profitable growth organically, and we are now looking for our next acquisition. And that is it, Martin.
Steve, thank you. You previously mentioned you had a significant fee you paid to a distributor for exclusive shelf space in Q2, and that would affect gross margins in Q2. Can you indicate what gross margins would have been had this fee not been paid?
So I need to clarify. We are recording that. So the fee that we paid to one of our biggest US customers is called a slotting fee. So we paid a one-time fee, and we are essentially displacing or replacing a competitive product with the Pure DE 20-pound bag. And we are paying that fee in the form of issuing credits against invoices, and that we will show up those fees in Q3 and perhaps into Q4. So that was an investment that we made. The company, we have been doing business with them for decades, and we had 3 SKUs with this company. We had a Red Lake Earth 40-pound bag, a Red Lake Earth 4-pound bag, and then a bag of Stall Dry. So now we are moving into 2 new SKUs, the 20-pound bag of Pure DE, and this is on their planogram, which means it's in every one of the 2,434 stores. This is the product where we got all the purchase orders in October and started fulfilling them in November and December. And then the Bennett family is producing the 20-pound bag from the mineral, the zeolite, the diatomaceous earth deposit in Eastern Oregon. And the 20-pound bags are packaged and shipped direct to our customer from the US. We have brought up bulk bags of the DE, and we are doing the puffer bottles right now in Kamloops. We've shipped thousands and thousands of these puffer bottles in the last 6 weeks. And long term, we intend to also produce the puffer bottles and the jugs in Oregon as well. But that will require an expansion of facilities, and that is part of our long-term growth strategy in the US.
Can you give us an update on your backlog? How should investors evaluate this information? Should the backlog be turned into revenue in the short term or medium term?
So we typically fulfill purchase orders within 6 weeks of receiving them. So we had a record backlog at the close of Q2. We had a record number of purchase orders. Our backlog has gone to more normal levels. We've been very active producing and shipping, basically starting in the first week of November. I don't want to get into providing actual numbers guidance, but I did mention in the presentation and also in our news release last week that we saw record agricultural sales in Q1. They declined a little bit in Q2, and they've resumed very strong for us in Q3. So our backlog is much closer to normal levels. We're still seeing strong purchase orders coming in, but we were able to, after we got our brand new robotic palletizer installed at the end of Q2, it's fully functional now, and we're back to business as usual with a reduced backlog.
With those purchase orders, do you fill them when you have the capacity to fill them, or is there, let's say, a purchase order for delivery on March 1st, and you sort of sit on it until they have a delayed delivery time?
When we get purchase orders, it's basically first in, first out, and
Okay.
we have capacity to store about 1,000 pallets of product um, on site. So again, typically there's never more than 6 weeks between receiving a purchase order and fulfilling it. We had an exception in Q2 because we had this planned shutdown and we had retooling because we had a new product line. We had to fill puffer bottles, and that is something that's not in our normal course of business. So not only did we have our main line where we have our robotic palletizer shut down, but we also had retooling to do on a smaller line where we fill these puffer bottles. So this was the other thing is that I did mention in my presentation that when we purchased absorbent products, there had been very little money reinvested in the company for the decade before. We have made significant investment in the production lines, budgeted, and then we were blessed to receive some grants from Fortis as well, which allowed us to make another 2.6 million of investments, and a significant part of that is happening in Q4 with this new regrind line. So we will have another shutdown in Q4. It won't be as disruptive as it was in Q2. It is a second largest line versus our largest line. And so we will actually pre-make a lot of product, a lot of red lake earth and geothermal grout before we shut down. Probably about a 10-day shutdown this time. I hope that helps.
Are you continuing to sell White Lake Earth products? And where is it made, in Canada or the US?
Great question. All of our White Lake, we own the brand, but the Bennett family produces that for us in Eastern Oregon. And all of the product is produced in Eastern Oregon, and then it is drop shipped direct. We only do full truckloads. We're a B2B, and so we send full truckloads to our clients. I will note that our White Lake Earth is typically large distributors. And then we have a massive national chain that is taking our Pure DE. So I don't see any cannibalization between those two brands. They're sold by completely separate entities. And then the Pure DE, the 20-pound bags are made again in Eastern Oregon by the Bennett family. And we are producing the puffer bottles in the short term as we have the infrastructure. In the long term, it's our plan to work with the Bennett family to grow processing operations in Eastern Oregon so that ultimately a product made in the States doesn't need to come back to Canada to go back to the States. But in the short term, the puffer bottles are being done here in Kamloops.
Are you making any other products in the US?
Just the White Lake Earth and the Pure DE. We have under development two different geographic locations where we are testing and blending different forms of different sources of DE with limestone and with pause glass to look at producing Gladiator. Ultimately, we're looking at we have a very promising opportunity potentially near the LA market where we have identified a source of waste DE fines, and we've gotten some very promising results on the Gladiator we've made from there. And then, of course, we are also looking at Gladiator as a potential in Eastern Oregon, but that would require the blessing of the owner of that mineral property, which is one of the biggest cement companies in the world. So we are, we're working on these things. There's no guarantee, but ultimately we also are very keen and we would be very open to an acquisition of an industrial mineral processor in the US, and we are actively looking for same.
Do you plan to expand operations with a bricks and mortar or a physical location in the US in the near future? And how do you expect this expansion could take place through sort of a greenfield facility building that out or through an acquisition?
I much prefer to find an acquisition. I believe personally my own skill sets are better at finding existing legacy businesses and improving them, as our team has done with absorbent products. If it requires greenfield construction to grow a legacy business, that's also in the cards as well. And I've already talked about our desire to grow the Pure DE line along with working with the Bennett family in Eastern Oregon. So I guess the answer is both, but our preference would be to find a legacy business that's accretive and where we can make 1 + 1 = 3 by combining duplicate costs and reducing them while staying in our own lane. The assets that we're interested in is industrial mineral processing or glass processing.
What are the three main growth drivers that you are most excited about going forward?
I am extremely excited about Pure DE and its potential in Canada and the US. We haven't started looking to market it in Canada, but we intend to do so. I am very excited about incremental growth through the introduction of lightweight cat litter. There are some much bigger companies than us that are public that you know, have been very transparent about their growth. Oil Dry of America, a company about 30 times bigger than us that trades on New York Stock Exchange. If you look at their annual letter to shareholders over the last 3, 4 years, they frequently reference how much growth in their business has been attributed to growth in lightweight cat litter sales. They're a company that I really find them very impressive, their operations and the growth that they've achieved. And then thirdly, our third would be Pause Glass and Gladiator. And we will be making Pause Glass in 2026 calendar year, closer to the end of the year. It's my intention to invite the CEOs of all the biggest cement companies in the world to come and see our operations. And we want to leverage this technology and get Pause Glass produced at cement kilns. And then further to that, we're very excited about producing even larger volumes by using Pause Glass as one of 3 ingredients in Gladiator. So the Pause Glass and Gladiator would be my third thing that I'm very excited about.
Why have you developed, or are you developing a second SCM or supplementary cementing material, Gladiator, while Pause Glass is still in development?
I think I just answered that. If you look at the consumption, for example, there's about 20 million tons of glass consumed, post-consumer glass in the U.S. in a year. And if you take roughly 100 million tons of Portland cement and the only SCM you could replace it with was glass, then you would use every ounce of glass to replace 20% of that 100 million tons. Well, there are other uses for that glass. So from a macro level, while we are confident that we can procure large amounts of glass that goes to landfill in specific areas, we can go that much further, a factor of 10, by using it as one component of Gladiator. And of course, the use of the glass gives some wonderful attributes to this second cement Gladiator, but we can expand its volume by a factor of 10.
Can you provide an update on the Calgary Cement Lab? What are your prime objectives for this initiative?
Absolutely. We take possession of a property on January 1st in North Calgary, where we have a lab as well as a new boardroom and a marketing room where we can meet with investors. And we're very excited about this facility that we are designing from scratch. And we have shortlisted candidates as senior cement techs. We'll make some hiring decisions in January, and we will have our grand opening in March. We've ordered most of the equipment for the lab. There are some things that we have in duplicate that are coming from Kamloops. I must stress that there will be no reduction in the functionality of the Kamloops lab, but the Kamloops lab's primary focus, and it will be exceptionally busy, is ensuring quality control of all the product that is made from the Pause Glass plant. And the Calgary facility will be for developing Gladiator. But in addition to that, I've instructed Dr. Brown, who's the president of our Alberta subsidiary, Progressive Planet Alberta, that I want this lab to be a profit center. We are in discussion with multiple clients to become our first paying clients, and I want this lab in Calgary ultimately to be a profit center in the long term for the company.
As a profit center, would it be like a contract research organization, or what would their like business model be?
So cement labs typically are paid to crush cylinders, to crush mortar cubes, to conduct flow, to conduct water demand tests. We have all of the equipment to do this internally, and there are many other cement techs that do not have their own labs. And so that our business model would be to um, conduct these third party and also to provide access to clients to bring some of their own professionals into our lab space. Stay tuned. We are in discussion, and again, I've emphasized to Dr. Brown, I do want this to be a profit center for us um, going forward.
Looking out to worldwide expansion, are there areas of the world where silicate and diatomaceous mines can be found in close proximity to each other and near growing markets? Are you looking now to buy some? And Happy New Year.
Happy New Year to that investor or potential investor. Um, Diatomaceous earth is typically found west of the Mississippi in in North America, and there are similar products, also known as kaolinite or metakaolin, that we're very interested in producing a Gladiator type product with that would be found on the east coast of the continent. Um, Globally, I can't speak intelligently. My focus is to do this right at home first and then to look for opportunities outside of North America secondarily. So I can't really speak intelligently about past North America. Our focus for expansion, even the East Coast for us, a 3 hour time difference is somewhat disruptive. We've been presented opportunities that are interesting to us in Saskatchewan, Alberta, Utah, the Washington area, and Oregon. And all of those are areas where we've seen opportunities, and they're not far away from time zones or even from flying to and from. So those are the areas that we're interested in growing and expanding our business for now.
Would it be possible for you to produce more than 3,500 tons of pause glass? And what would it take to produce more?
Yes, but I must emphasize, and people ask me about the Pause Glass pilot plant being a profit center. It is not designed to be a profit center. It is designed for two reasons: to quantify our LCA number or life cycle assessment number and compare it to the LCA number for the average cement plant in North America. And number two, to demonstrate that we can produce at scale economically. The grants that we received were predicated on this being a pilot plant. I will also say that there are some very significant material tax incentives that the Carney government was successful in introducing when their budget was passed. And specifically, they revolve around the rapid claiming of the capital cost allowance on buildings or building additions that are constructed where 90% of the intent is manufacturing. And there's some very significant tax incentives, as well as the Carney government introduced refundable tax credits to public companies. So for decades, as a public company, you could only get non-refundable tax credits, which means that if you pay the tax and you get a credit for the same amount, you get the tax back. With refundable tax credits, which were always available to private sector companies, doesn't matter how much tax you pay, the amount of the refundable tax credit is the cash you get back from the government. And this was always a burr in my bonnet, and I found it made no sense. A public company and a private company could be the exact same size in the exact same markets with the exact same focus on solving technical problems with the same number of employees. And one company could get refundable tax credits and one couldn't. Now this has changed, and so that's very exciting for us when we file our tax return for the current year. We're excited about the opportunities for us to avail of both refundable tax credits for our R&D expenses that have not been supplemented with the grants, as well as the ability to accelerate the write-off of the pretty significant property, plant, and equipment additions that we are making to the properties on Sarcee Street in the Mount Paul Industrial Park.
Do you expect the plant in Kamloops? It won't be a profit center, but after it's done its job, will it continue to operate and generate revenues, or will it be kind of shuttered?
I envision if we scale up to larger amounts, I would see us at the end of the pilot plant dismantling it and then building something bigger, whether that's in Kamloops or Kelowna or the Lower Mainland for our first plant, or if that's in Montreal where there's an enormous amount of glass, or metropolitan Toronto. I'm not sure. Right now, my focus for right now for the next couple of years is to ensure that the pilot plant runs as efficiently as it can possibly do. One of the milestones that we had to supply to the funding agencies as part of our first milestone was that we had to produce an estimated LCA number. And the average LCA, or life cycle assessment number, which is the number of kilograms of CO2 produced to make 1 ton of Portland. The LCA number on average for cement plants in North America is about 900 kilos. The first estimate of the LCA, and this was produced by a third-party engineering firm that are licensed to produce these numbers for us, called Bright Spot Climate Corp. Our first LCA number was 251 kilograms. So from 900 to produce 1 ton, 900 kilos of CO2 to produce 1 ton of cement. Our first estimate produced in conjunction with Bright Spot Climate Corp of our LCA number is 251 kilos. They gave us ways and we discovered ways to reduce that even further. And we re-engaged them to produce a second LCA with an engineering change that I'm not going to talk about, but I'm very excited about where I'm hoping the LCA number will actually be under 200 kilos. So that is the main purpose, produce that actual LCA footprint and demonstrate that we can produce at scale a product that is suitable and of similar quality to what we produce in the lab.
Will Q3 be profitable given the write-off of the quarry asset and the selling costs that are temporarily inflated from the listing fees and those marketing expenses?
I'm not going to provide guidance on Q3. I'm very comfortable with how our business has rebounded. Um, the write-off of a legacy exploration asset where the bulk of the money was spent prior to 2018. I'm trusting that the investment community will view that as a one-time event that's not material to the ongoing operations of the company today.
And may I,
We
sorry, add a non-cash expense as well, because you're writing off a historical investment, right?
Well, we're writing off investment where shares were issued and cash was paid in the past. This is a sunk cost from pre-2018. What may not be readily apparent to all of our investors is that every year we have to justify an investment to carry it at book value. And again, there have been some, pretty aggressive comments made by one particular person on a bunch of billboards talking about our decision to write off this asset. It's not simply a decision. If you do not feel that this has economic long-term benefit, then you need to write it off. So we came to the conclusion that for us as a business, it made better sense to invest incremental money into other existing portfolio of assets rather than attempt to spend the money on a new mining plan and to pursue keeping the Z1. And, with the Ferguson Creek, we're getting much stronger strength activity results in our mortar cubes. And our geologists, our third-party firms that we consult with, it appears to be a many, many times bigger asset. I'm not providing, National Instrument 43101 guidance, but just common sense about viewing the size of the Z1 and the Ferguson Creek. It appears to be a much, much bigger deposit. And at the same time, when we acquired Absorbent, we received an interest in the Bromley Creek zeolite. It had higher cation exchange capacity than the Z1, higher clinoptilolite zeolite content, and it had two existing products, Green Patch and Z-Feed. And we had no viable commercial products with the Z1. So while it's never fun to take the write down, we took it. I own it. I'm the CEO, and I disclosed it with the Q2, even though the lease expired in November, and our final decision was made after Q2 that this asset was no longer made sense in our portfolio.
Is there any possibility that the lightweight cat litter product could be postponed into next fiscal year?
Highly unlikely. We're waiting on one small piece of equipment. We have an estimated date that's well before year end. So anything is possible, but unlikely.
Is the next acquisition more likely to be in the US with a US-based manufacturing theme, as in given the tariff protection and issues, or into new product lines like absorbent product acquisition was?
We have about 10 different opportunities that we are currently evaluating. We may not do anything on any of them. We do intend to expend more energy and resources on looking in 2026, but I'm not answering that question. At this point in time, I don't know.
Can you tell us about the public company investment on your balance sheet?
Yeah, it pays a great dividend. It's seen a significant increase in value, even since the end of Q2, and that's all I'm prepared to say at this point. But with 2020 hindsight, I'm delighted that we've made the investment. It's paid us very strong dividends, which have been disclosed, and it's seen a very healthy appreciation in its share price. That's all I'm willing to say.
When is it scheduled that the pilot plant will be fully constructed and operational?
So there are two phases. We expect to be producing dry, powdered, and cullet product before the end of our current fiscal year, which ends in April. And then we expect to be producing pos glass, which requires the wet grinding, around November of 2026. And we did, we assembled and produced finished pos glass, about 1 metric ton of it. But that was not the proper phase two. We did that with some legacy equipment and we purchased some used equipment. But we wanted to demonstrate, because we were several months behind on the first phase, we wanted to show good faith and demonstrate to the market and to our funding partners, the federal and provincial grant agencies, that we could actually make pos glass. And we did that, and we did that with a big splash. And our first commercial pour of pos glass that happened on November 19th of this year.
And that concludes the Q&A session. Steve, do you have any final comments before we wrap up the call?
I wish all of our investors and potential investors a Merry Christmas or a happy holiday season. I'm grateful for that you've trusted us with some of your investment capital. I will do my best. I'm not perfect. I make mistakes, but I will always give my best, and I'm very passionate about this. We have a wonderful team of people. We're just getting started, and we're looking to, I will say, rinse and repeat the success with absorbent. There are a very large number of well-run businesses, both private and public, that are owned by baby boomers that don't necessarily have a succession plan that involves family. And so we're very excited about opportunities to grow. And in 2026, we will expend considerable resources to continue making our legacy business more efficient, to move towards the production of pos glass, to move towards further testing of Gladiator, while also looking for our next acquisition. And thank you, everybody, for your time. I really appreciate it.
Steve, thank you very much. Happy holidays, Merry Christmas, and all the best in the New Year's. Cheers.
Thank you.